Okay, welcome traders to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, April 4th. Michael Boutros here with you this morning, guys. Great to be here. Pooja is back in the house. Saful, Vladimir, Ziad, good to see you guys here. So where shall we begin? Marcella and Mark, great to see you guys as well. Kazaa, Graham, Gary, got the whole crew. So where do we start? First webinar of the month, quarter, and I guess week here on SB. Do want to go over DXY obviously to start things off, but the Euro crosses from earlier in the week and the Aussie crosses are still sort of my main focus. I do like a dollar CAD. I'm with Jamie on that dollar CAD position that we're looking at on the swing side of things. Thanks for the update on Euro Oz and Aussie Yen yesterday. Yeah, Pooja, Aussie Yen right now kind of has me a little perplexed. You saw some yen strength and I guess some Aussie weakness at the same time, so it kind of like exacerbated the move. I'm holding Aussie dollars short from 75.80. Said, yeah, we're definitely going to go over Aussie from last night's RBA. Really interesting commentary from Philip Lowe, governor of the RBA. We'll go over some of his comments as well. Euro dollar, Euro key, Euro CAD is on the menu first. From last night. We'll cover Aussie dollar. We'll hit Euro Oz. We'll give you a nice Aussie Yen update, Pooja, here too as well as dollar Yen, I guess. I'm not really a big fan of dollar Yen, but I did see a couple questions on there yesterday. And we will hit the commodities as well as the SPX and crude. Okay. Anything else you guys want to specifically cover? Any other trade setups or questions? As always, feel free. Dollar CAD. Yep. Got you on that one. It's on the list. Well, now it is. Okay. And as always, feel free to throw any messages or comments or questions on the message board, guys. So we just got the release of trade balance figures for the month of February for the United States, coming in slightly better than expected, showing a smaller deficit, negative 43.6 billion. Not going to be a major market mover. You have a whole plethora of stuff coming up. You do have some more commentary later today from some Fed speakers, but heading into the latter part of the week, you get ADP, then you get some more ISM data, and then obviously non-farm payrolls on Friday to close out the first week of the month. So sit tight. As I said yesterday, it's slim pickings, but be selective. As we open up some of these opening ranges, we're likely to get a lot more volatility. And not only that, some of the opening ranges are taking shape just at like beautiful points in price. So keep your engines warm and stay poised. Questions on the SPX DAX as well. Vlad, I don't really have active setups on the DAX, but we could certainly take a look. Let me put it on the list for sure. Gary wants to cover gold and silver. Yeah, I had gold on there. Let me add silver as well. Really clean structure on silver, actually, so we'll hit both of those. No worries. Okay, we got a list. Let's jump right in. Here's what the dollar index looks like to start off this session. Really not much to say except that we're coming into a big spot. You might have seen Jamie just tweet also a chart of the US dollar index, which is the Dow Jones FXCM dollar index. At its inception, equally weighted four of the most major, most liquid currencies. So it's a little bit different from the DXY, which is super heavy, 60% almost, the euro. It's great that we both cover both because you guys get a flavor on both of those indices, which markets are looking at. Futures markets, they'll tend to look more at the DXY. So either way, both of those indices coming in some nice levels. Vlad, Euro, Yen, gotcha. Coming in some nice levels. So you guys have heard me talk about it for a while since the start of the week. 100 spot 55, 100 spot 66. Nice little region right here. Former swing lows from back in February. Also a 50% retracement just of the near-term decline off the highs that we made here. So from a structural standpoint, even on the daily chart, we looked at this yesterday in the webinar. If you take a parallel just off the high from that late August swing, caught the lows right here basically for the year previous to this month or March. And then I guess you just call it the February low, and then that converges right here as well. So look, either way you slice it, you're looking at the possibility for some near-term exhaustion here in the index. okay? Which is why I'm a little curbed on the appetite as far as getting really aggressive on the Aussie short. It was a really nice play, continued to play out very nice, but you're coming into some support, which we'll look at in a moment. So keep these levels in mind, no change on the dollar index. Near-term support still at 100, okay? Key support, I would still put 99.53. Questions on the index? We cover this every session, so I just didn't want to beat it up. We got a lot to go over today. Even on this rally here, you don't have divergence per se, but you do have a little bit of a waning momentum signature. So could make a stab into a new high. 101 is that key region, again, where you're coming into a 618, a swing low, the 50 line, okay, for the structure that we've been following to the downside. So you know where the level to look at if we do pop higher, but as it stands, I am looking for some possibility of near-term exhaustion here. And it would be a really nice spot to set up the weekly opening range high. So let's see if we can't get a hold here in the dollar index. Now the implications are the exact reverse for the euro dollar. And here's what we're looking at with the euro yesterday. Okay, euro is coming in some support at 106.52, and if you guys recall from last week, that was our bullish invalidation level. So we were actually looking to play the drop. We had a really clean break of the weekly opening range, which shifted the focus to the downside. We went through all those near-term targets. 106.52 is an area of interest for exhaustion and long exposure. Okay, also our bullish invalidation. It's interesting because the dollar index was at resistance as well. So here we are with a slight probe above that, not really giving us a clean-cut run. Euro's doing the same thing. Slight probe to the downside, not really quite a clear-cut run. A little bit more of a clear-cut divergent signal here, with price action making a lower low as the oscillator makes a higher low on this 120-minute chart. So you're getting the onset of what looks like it could be exhaustion. But I'm thinking the same type of deal here on euro. So as far as the euro levels are concerned, no change on that either. You have a clear-cut weekly opening range. If we pop through 106.80, let's call it 106.83, look for that rally. This is the breakout zone, where if we clear, you'd think a little bit more of a constructive path towards 107.50, towards the median line here, but ultimately 108.20 would be sort of where you'd look for a target on the rally for the breakout up here. So that would entail some dollar weakness, okay? Dollar's at near-term resistance. Do we get this high? I don't know. But what I do know is I'm looking for some exhaustions, more signals for long triggers here as we get deeper into the week. By the way, 105.83 is what would shift the broader focus lower. That's last month's open. That's trendline support and the median line support for the structure we've been following. And that would shift the focus, in my humble opinion, way lower in euro. I mean, the whole rebound idea at that point, I think, would be lost if we break below this region. All right, so that's where we are with the euro from this standpoint. Again, you know, just looking at this objectively, I hate to kind of give you the zigzag explanation or expectation, but I'm thinking rebound. We'd look for some resistance near some swing lows. Then we look for a new low towards that region where it based the larger rally. And that would give the dollar a little bit more time to recuperate, to restabilize from the losses that we just saw last month. So let's see if we can't get some upside here. Questions on euro dollar? All right. We are running through these today. Number 3 is going to be euro kiwi. A little bit of an interesting pair, but we've been following it, so I wanted to give you an update on where we are on that. Here's what euro kiwi looked like last night. Okay, the last update was on the 26th, and if you look on the 26th update, basically we were talking about bullish invalidation. There's a typo there now, raised to 152 to account for slope. We got the downside break, and 152 was basically right here. Okay, it's the same level that we were looking at as sort of a level of which we want to hold as support. The rebound did materialize, okay, and now we're just testing the opening range high for the week, basically the Monday high, and that looks like it's holding near term. So again, a very clear-cut weekly opening range, might not be primed for the play just yet, But what I did want to note was what was going on in the broader picture for that. Excuse me, fighting off a little cough here. Here's what the daily chart looks like. And what I wanted to show you was that where we were coming into as support is a very interesting spot besides just being the swing range lows from last month. Okay, you have the 200-day moving average, which sneaks right in there. If we just take a longer look here, slope support, which we've been following, this is basic slope resistance, extending off some lows here. We talked about this, touch, touch, break, instant resistance, resistance, break, give you a ran, support, and here's the confluence with the 200-day moving average. Okay, add to that then, now you have some swing highs, and some swing lows. So there's some nice region of which, okay, cool, markets should find some support. Now when you zoom into the near-term structure and then the near-term slope comes in there, that gives you, okay, pay attention, pay attention. Near-term guys are looking at it, so the intraday picture or intra-week picture, whatever you want to call it, is finding support. Long-term picture looks like it's finding support. It's the range lows, yada, yada. Long story short, look for a break of the weekly opening range. Like I said, I'm not a big fan. As I said in the piece yesterday, I'm not necessarily a big fan of Kiwi strength, but the downside targets are pretty clear. So if the Kiwi does indeed rally or the Euro just completely breaks down, which is not my base case scenario, but we always have to have a plan for the other side. A break below last week's low is pretty much finito. You look for 51.20, the median line, more key support down at the 50 handle. So you know the levels to the downside. But preferred scenario is for us to see a breach above 53.15 and then a breakout. And as I said in the piece yesterday, this thing could explode. Okay, if this thing breaks to the upside, remember where we came off of last week, guys. This was a huge region of resistance. I've reworked the levels a little bit. But if you take this basic 236 retracement, this is off the high that we made back in August. It caught the high exactly for the year so far. Okay, and now it converges over the next, I want to say week, heading into next week with the median line and the June low. I know this is just an obscure, it looks like an obscure candle, but this is actually the June low, and you've had some really nice pivots there. And even caught the early rally that we made in March. So this whole region, 54.50, 54.80, it's a bigger region, but it's a Euro key trade, a little bit larger of an ATR, very clear levels. Look for a break of the weekly opening range. 53.15 is what's needed, last Friday's high, to really get this thing going for a little bit more of a stretch higher. Euro key, any questions? Going once, going twice. I don't think we have any major Kiwi data on tap this week. Yeah, it's a pretty quiet week for Kiwi data. You do have some house price index coming out, or the QV house prices coming out later today, but I don't think it'll be a major market mover. All right, moving right along, Euro CAD, last one from last night, and then we'll go into some of your questions in the previous updates. Euro CAD looked like this. A very interesting trade for me because I do like the dollar CAD short. Okay, so that's CAD strength. And I think Euro, again, has a little bit more of a risk. If it does spill, this would be a nice play. Broadly speaking, looking for a rally towards the December high. And that takes you basically into like 43.60. So I'm trying to see if we can get some more upswing on that play near term. Ultimately, I do want to sell it for a little bit more of a downside play. Not necessarily to make a new low at this point since we are breaking higher, but to give us an opportunity to get back on the long side. Here's basically what I'm looking at with EuroCAD. Let me show you the live chart. Here's what daily looks like. This is the level we need to beat, okay, to get continuation. So this is a longer term structure, and although we've seen some probes through, it held. The slope held for so long and so clean. So I'm still paying attention to it. I reworked this slope as well. It's been a while since I wrote about EuroCAD actually on the intraday. So this is the new slope I'm working with, just off the highs of this year, the lows of this year, and the highs and the lows from December. Really clean as far as catching the highs here, and a nice little pivot in the median line. So this is a big region because if we clear that, that puts the upper parallel like way up at 44.80. That's another like 180 pips to the upside. That's even before you reach the high day close in that 50% that caught it last month. So I think there's a lot of room. I just don't want to start running and starting to chase this from here. So yeah, the immediate focus is still higher. I'd be looking for some kickback from here again, that 200-day moving average, which has been a little bit more of a pivot here, not sort of a major pivot, but you can see if you follow that green line, support, resistance, resistance, didn't really do much back here, but near term has been paying attention. The market has paid attention to it, and that converges on that upper parallel. So near term, here's what it looks like on the EuroCAD. 240-minute chart. Okay, and here's what it looked like last night. So we are pushing higher. Again, 43.60, 43.85. Like that's the key near-term level to beat. And then a pop there, and the targets are pretty clear. Initially, we'd be looking just for 44.35 for a 618. Then that median line, subsequent 45.30. But from here, I'm kind of thinking a spike, you get a little bit of a relief, the CAD gets some strength that pulls Euro CAD lower, and then you look to base a new rally somewhere near that median line, depending on where you are in time. Now again, if this just pops through, forget that idea. But as it stands, the upside gets into risk. You want to start shaving some of that off as you get into this region. EuroCAD, questions? That's number 4. All right, number 5, Aussie dollar. So Philip Lowe, Mr. Lowe comes out with some really interesting commentary. Mostly, you know, the thing that kind of struck markets the most was the warning tone he gave that he's willing to implement further policies specifically on lending standards, as he continues to suggest that lending standards remain excessively lax. They're concerned about the, you know, property just retail, I guess, property bubble that is seemingly playing there. Look, the RBA's hands are completely tied. They can't raise rates because the market isn't quite there yet. And they can't keep rates this low because, again, this overheating in the property bubble. And inflation isn't right there yet for them to be able to aggressively start moving on rates. They're at a record low at 1.5%. Okay, that's the lowest the RBA's been at. And now they have to start to play catch up with a Fed that's starting to normalize and talking about, you know, offloading the balance sheet. So they're really caught between a rock and a hard place. Long story short, the commentary was enough to really prompt the drop in the Aussie that we've been looking for. The update from the previous night, here's what it looks like on the second. Here's what we're looking at with the Aussie dollar. You know, the broader story was at risk below 76.60, a break below 76. Remember the focus region that we highlighted early in the week, 76 into 76.60, with the risk weighted to the downside well below channel resistance. It was really a perfect play. You didn't get the rally into channel resistance per se, but certainly the breakdown has continued. And now we're in this region, which is why I just want to curb my appetite. Look at the right here. Look at the daily chart is showing. 200-day moving average, followed very closely by really sharp downslope support. I don't really like using these crazy downslope supports, but something to pay attention to. And you know what else is something to pay attention to? It just popped out at me. I just want to see what this looks like. Again, it might be too gradient, might be too much. Okay, we won't work with that right yet, but we'll keep it in our sights. Long story short, watch for some near-term support. If you're holding shorts on Aussie, Pooja, I know that you are. I'm not sure what your target is, but near term, you're coming to some areas of interest. I wouldn't necessarily dump the whole position just yet, but here's what I'm looking at. And here's what again, the intraday chart looks like on Sunday. So we're there. guys. We're at the bottom of this descending channel formation. You might dribble down a little bit lower. It extends down in 75.35, so you might have another 15 pips or so to squeeze out of it. But I'd start to look for some reaction. If this breaks, okay, a stop against 75.90, by the way, sounds good to me. But if this breaks, 74.90, the lows that we made basically for March, it's not even basically, it's the March low. And then your 75.40 level would complete a basic 50% retracement of the advance off the lows. So the levels are like super clear. But just let you know that we're coming in some near-term support. I'd be looking for resistance near 75.90. Again, you have some slope there with a nice pivot off the highs. You have the 618 retracement, of which the range we are still respecting. Okay, we're still within the confines of that range, and the swing lows from last week. So it's a good spot to drop our near-term bullish invalidation level, or excuse me, bearish invalidation level, bearish invalidation. Questions on the Aussie dollar. Definitely gave us a kick here and a nice help with Mr. Lowe's commentary. Didn't necessarily see that coming, but hey, we'll take it. Other interesting commentary besides the lending standards, where he was talking about distribution of land to kind of encourage or stoke more residential development and whatnot. So seems like it's a serious concern there, and their hands are really tied. So we'll see what the RBA has for us this year. Okay. Euro Oz, nice segue into the Euro Oz. We took a look at Euro dollar, we took a look at Aussie dollar. Here's what Euro Oz looks like. We're approaching near-term resistance by my count. Obviously, Aussie weakness has continued to stoke this trade as well, a trade that we were following earlier in the week. Here's what Euro Oz looked like on the 2nd. Okay, we highlighted the risk for this near-term rebound coming into some support here at the lower parallel. Basically, we're coming into resistance right now, just to put it plain and simple. 140.50, remember, was the near-term bearish invalidation level. The focus range to start the week was 140 into 140.15. We kind of plowed through 140.15 right through the open, okay? But once we got the weekly open range into a nice kind of pattern, this shifted things. Here's the break, now coming in some near-term resistance at the 50 line for the current operative structure, and the 50% retracement of that near-term decline. Okay, a little bit more of a critical resistance region comes in up here, 41.70 into 41.85. Basically, it's the highs that you made for the early March opening range, and this would be the 618 of the decline, a little bit more of a key Fibonacci consideration. But near term, I am starting to look for some exhaustion here into 41.30. That would suggest, again, look for Aussie to possibly find some support on this decline that we're seeing. Booked profits, or booked partial profits, says Pooja. Next target, 75.30 and 74.90. Yeah. Yep. I like 74.90. Obviously, that's going to be the March low, as we noted. What do you have at 75.30? Is that just slope? Because that's exactly where I would have slope, basically channel resistance in time, or channel support in time. If we kind of meander here or get a little pop in US trade and then move lower. But good targets. All right, any questions on any of the Euro, I guess, or Aussie crosses at this point? We've kind of exhausted all of them. But if there's any questions, feel free to drop them on the message board. So look for near-term exhaustion here, possibly, of the Aussie weakness, but not to be trifled with. Still think there's more to go. 100% off the March 20th high, hey? March 20th high. Oh, this is Euro Oz. Sorry, guys, I just want to see which... Oh, that actually is an extension we should probably have in sight. Yeah. Comes in a little off on mine. I still have it right lower. 50 or 75.18. give or take a pip, but yeah, not a bad target to have on view for sure. Thanks, Pooja. We'll leave that on there. Okay, so that is Euro Oz, number 6. Let's jump into one last thing here for considerations, Aussie Yen. This is just something we probed into yesterday. The near-term picture for me just turned really, really sexy with this last drop, and this is why I wanted to bring it up. Do you see where that low came in? I don't know if you guys were in the webinar yesterday on Daily FX, but we kind of threw this together real quick. And when we threw this pitchfork on, you know, I didn't know it was going to be quite that clean, but here's a perfect tag of that. Highlighting again key or near-term resistance. Now comes in former support that we highlighted yesterday, 83.70. Want to get rid of these. Here's the daily chart. Okay. Aussie Yen has been my trade of the year for Daily FX. By the way, a quick segue for like the last 2 years. The major decline came into a support zone that we were looking at for literally a year and a half. It was insane reaction off that. Ended up being the yearly low. This year we were looking for a more substantiated pullback into this region to get a higher or a rip through this key resistance zone. Okay, I am looking for Aussie Yen to see a lot more upside this year. My personal humble opinion. That being said, the turn is breaking the yearly opening range lows. So the decline we were looking for early in the quarter may be coming later in the year instead, a little off on time. Nonetheless, you're coming into a key or near-term support confluence. So this 83 zone is basically a 38.2 retracement of this low, not taking into account the Brexit scenario, which is here on June 24th. So, you know, barring that stretch low, a basic 38.2 retracement of that advance comes in here with slope support. And the only reason I'm still working with that slope is because it caught the lows, caught the highs, pretty close to the highs. Resistance, while we did break a little here, a parallel of that slope literally caught the stretch lows. So I'm happy with that slope and gradient, no problem. And basically, like I said, that converges all right here into the 83 handle. So you got a little bit more to go, maybe another 40 pips to the downside in Aussie Yen before you start to come up in some big, big levels. And I recognize that this is the yearly opening range low, but still, you know, support is support, resistance is resistance. So that being said, take that into consideration, Pooja. There is some interesting stuff to look at here as far as the possibility for a near-term rebound or just at least a pause in this decline because you're coming in such a big region of support. 83 is level to watch. Make sense? Pooja says you are the teacher. Cheers, Pooja. All right. Moving right along. I guess it's a good time to take a segue also into dollar yen. Here's what dollar yen looked like earlier in the week. I don't think we covered it yet this week. So here's what the chart looks like. Where are thou, dollar yen? So Aussie yen coming into a big area of support. Dollar yen, not quite there yet. Not quite there yet. I don't know if it's just me being stubborn or me capitulating, guys, but I still like the long side of dollar yen. And I know, you know, I'm one of those guys when the market, you know, speaks, when the market makes a move, you have to follow it. You're going to be stubborn, you're going to continue to favor one side, you fall in love with the bias, you're going to get ripped. But I can't get excited about dollar yen short here. At the same time, the conditions aren't there yet for me personally to get long. So I'm kind of just sitting here, guys. I don't really know, and I don't have much to say on dollar yen. And, you know, sometimes that's okay. There's so many other things that are in view right now that I'd rather sit on the sidelines than mess with the abomination and really try to get fancy with it. Here's the near-term chart looks like. I don't even really have a support target at this point. Even if you take a retracement just off the near-term rally, you're not even responding to any of those levels. So, you know, I'm not going to just tack on retracements and start looking for stuff that's not really the market's not giving you a response to. 110.10. I know Jamie's looking at 110.52, but you know 110.10 might be a nice area. Beyond that, from a slope standpoint, that could offer some support. If we rally, I like I said early in the week, I need to see a sustained hold above 111.45. We talked about that level all last week. Ended up being a really nice pivot, by the way. That's the breach I would need to get a little excited. You know what I mean about a long side trade on dollar yen? Till then, man, I don't really have a very strong opinion on dollar yen. Any questions? Does anyone have anything that they want to chuck at me or with dollar yen? Yeah, I mean, I would have to even agree with you. The abomination, a comment here, abomination is exactly why I stayed out of Aussie yen, even when the levels look nice. I'm going to agree with you, and I'm going to disagree with you on a couple of different things. I'm going to agree with you that if I had to trade a yen cross, if someone put a gun to my head, which no one ever will, but let's say if someone had a gun to my head, I'd rather play in the crosses, as odd as that seems. Yen is typically a very treacherous pair, but the crosses look cleaner from a technical standpoint. So we'll go over Euro Yen in a moment. I know, I think Vlad wants to look at that. But yeah, I mean, if I had to trade a yen cross, I'd rather be in Aussie yen or a Euro Yen trade than play the dollar yen. Gary says, I have the same views on the abomination and exclamation point. I think 111.40 is going to be massive resistance or support, I suspect. Well, it's been a big region for us. You know, I've been talking about 111.45 for like a long, long time. It's just a big region. Not only is that those swing highs, but, you know, we turned just pips ahead of it. You had the 38.2, like I said, of the advance. There's just a lot there. Markets have been pivoting there for quite a while, that whole zone, right? So we just need a definitive response. And you know what? It's the second day of the month, quarter, and week. Let's get some play under this, and I'm sure we'll have further clarity on dollar yen. All right. Moving right along. Any questions on dollar yen? We're going to start jumping through this here. I want to hit SPX real quick. I haven't forgotten your question on the DAX, Vlad. I'll come back to that because I think I'm going to need to do some work live with that with you guys. But let's take a look really quick at the SPX just because no one here should be surprised that we moved lower yesterday off of resistance. And this is where the SPX gets tricky, okay? So where do I start? The daily chart, I mean, I guess we'll go over this real quick. The daily chart, basically all I want to show you here is the 50 line for the current operative structure we've been following. Boom, resistance and the former consolidation trend line support, triangle trend line support, wedge trend line support, whatever you want to call it. Both of those converged there on last month's open. Nice hold, pullback. Now the focus becomes on whether this is a break of resistance, check as support, and continue on your merry way, or do we get back below that 23.44 level and, you know, finally go for that target into 23 that we were looking at earlier last month. So the focus for me right now is basically this range, okay, 23.45 into the highs that you made last week, essentially, i.e. Friday, or was that? Yeah, that's Friday's high. That's what you have to focus on the near-term charts. Okay, this is that same slope. Is this in fact a break of resistance? Just checking it. Just want to check its support before I rip everyone's face off. I don't know, but same thing applies. Okay, that 23 level is still key support to the downside if we do break back below the upper parallel. And near term, the immediate focus is going to be 23.60, 23.63 as resistance. So I like, let me just clean this up a little bit. I like how price is reacting. I like how we have clear-cut definitive levels on what to look at. The directional bias of where you want to play this, that's what's in question at this point. Range traders, you're trading this. Breakout guys, we're looking for a little bit more of a definitive breach above this. And even if it does, guess what? Channel support comes in right around 23.77, 23.80 is a level of interest for the SPX. So very interesting levels, continuing to pan out pretty well. I don't want to change anything just necessarily just yet. The only thing I would add on this is a near-term retracement, and that highlights support. And those levels you want to kind of focus on for the SPX moving into this week. Questions? Okay, that is number 9. Number 10, let's take a quick segue into the commodity markets, crude, gold, and silver. Here's what crude looks like. Gary says breaking below 111.40s was big. Are you talking about dollar yen? It could be. It could be. Keep in mind risk is kind of tracking as well, so oops, we don't want to publish stuff for free. Get out of there. Let's see here. It could be, Gary. It could be. Again, this is why I'm a little bit more torn on dollar yen, but this is what dollar yen would do. It would invalidate a major key level like that just to get people like me and you to say, oh, wow, 111.40 is broken, and then it'll just reverse and rip people's face off. This is why this has earned that title, right? Deservingly so. Haven't forgotten, Vlad, I got you. Let me just get crude gold and silver right out of the way real quick. Here's what, well, I guess you know what? Let me do that first. Here, Vlad, here's for you, man. Euro yen. SPX. Then we went to Euro yen. That's going to be number 10. Here's what Euro yen looks like. Okay. Let's see where we are on Euro yen. Okay, I'm going to leave that 618 line on there just for now because it actually converges right on the 200-day moving average, which it looks like we're getting a reaction to initially. Parallel off the highs also looks like it's coming right in line with this region. Okay. Yeah, this is one of those charts, guys, where I know it might seem like there's a lot going on, but from a technical standpoint, it actually looks really, really good here. So look, Euro yen. This might be a really good spot. This might be a really good spot. Maybe another low near 116.50, 66 would be, I think, a gift. But a spot I'd be looking at is here nonetheless. So you have the 200-day moving average, which has been a clear-cut pivot in price. Instant break of resistance gave you a test of support and a move higher. So that's one thing to keep in mind. Last time we touched it was back here. Really nice resistance. Last time we touched that privy was here. That break was a breakdown. You get the picture. So 200-day moving average has been something Euro yen has kind of respected over the last couple of years. Keep that in mind. We're testing it today. Slope support, like I said, basic slope resistance. Resistance, resistance, a little bit of a probe through, extended off the low from last month, puts us there right now. The 618 line of the current downslope, the current operative structure, it was almost a perfect tag of the low that we made today. Momentum at 40. If it's going to rebound, this is the first place you'd start to look. With the extreme sort of major key support down here. Now, is that a trading strategy per se? No, we're just starting the month. Here's your monthly open. One other thing I do want to take into account, guys, bear with me just one more moment. Just want to see what this extension looks like. See the 618 break here gives the extension a little bit more merits because you did see that 618 break charge the decline again. Gives you another soft target at 117.04. Let's see what we were looking at back on the near-term chart. Okay. This is null and void. This is null and void. That perfect tag. So this level you see here at 117.56, guys, I don't want to start confusing everyone. I'm just going to leave it there because it lines up dead on. Look at my cursor on the right with that 200-day moving average. But this is actually a longer dated 1618 extension from just that first initial leg down that we saw from December into the March high, or the I guess this is the January high. So just keep that in mind. And it converges perfectly. I mean, look at that 618 line. Perfectly with that low we just made. Momentum is recovering a little bit above that 30 level. So look, I would be personally looking for, you know, a low right around these levels. With, like I said, a break below this region, you're kind of staring, look for 117, but you're kind of staring death in the face at 116.66. This is kind of where you need to find way a stronger support bounce if this thing's going to hold this upslope pattern. It's a whole lot of yen strength and a whole lot of euro weakness, but I'm looking for exhaustion here. Don't get cute and try to call the lows just yet, but let's see if we can't get at least a weekly or at least rather a session hourly opening range, something break to the upside before we start getting involved here. But the momentum signature is starting to look pretty decent. Some divergence into those lows, back above 60, or back above 30 rather. See if we can't get that bounce going a little bit more. Vlad, questions on this? Does that make sense? Absolutely. Thanks, says Vlad. Hey, you're more than welcome, sir. Okay, now let's jump into the commodities. Number 11, we'll do crude real quick. Don't have much necessarily to update on crude, except just to show you kind of like where we still are. We talked about the rebound off of major key support. We've been kind of constructive all last week. Now that region we were talking about, while it didn't hit yet, it's 51. It didn't quite hit yet. I do just want to note that slope resistance is starting to bring that target a little bit lower. So like with the rally that we saw, while this was sort of the major extreme, it would have been a really nice resistance region, all these slope, yada, yada, 50. Now that we're accounting for time, you know, you don't want to get too stubborn with it. This is still going to be resistance just below that now. So let's say like, you know, 50, 85. Basically the highs for the week, let's just call the opening range highs. What you want to respect is resistance. Daily chart also has basic slope resistance right there. That's also the weekly, excuse me, the yearly opening range lows. So do I think ultimately crude goes higher? Yes, I do. But this is the resistance range to breach. I do want to inevitably sell a new high, but I do think it needs to make a new high before this thing washes out. I doubt that it just makes that one bounce and turns lower. A lot of interest, and if we do get any type of near-term pullback in the dollar, it's also going to exacerbate some sort of push higher in some commodity prices. Okay, so sort of, let me get rid of this 38.2. Now that we have a little bit more of a mature weekly opening range, All right. Those would be the updated targets I'd work with. So look for near-term resistance still around here. Support would be along the median line. Bullish invalidation, by the way, would be right around there. Questions on crude? A breach higher. I didn't tell you the breach targets are the same. 51.97 into 52.22. I don't want to mess anything and target anything beyond that if it breaches, because it's a pretty big pivot, excuse me. It's also the 618 retracement of the advance and would necessitate a break of the upper parallel. So keep that level in mind if we do see that topside give way in crude prices. All right, gold would be number 12. Here's what the gold trade looks like. Another one that we've been following did break the high day close at 1252. We've been sort of sloping higher ever since. Still holding that 200-day moving average. Something to watch for. This is another trade where the weekly opening range is setting up right below a major key moving average, the yearly highs, and that's like a best case scenario, right? So if the March opening range breaks to the upside, that 1278 target we've talked about for weeks and months at this point is going to be the major key region to look for. If the opening range breaks to the downside, specifically clears Friday's low, I think you get a much steeper correction back to 1220 again. So the levels are clear early in the week, but we'll be looking for a break of this near-term weekly opening range for gold prices. Think the risk is a little bit more for that setback, and then we look for that rally towards 1278, but ultimately 1278 I do think is on the menu. That's number 12. Number 13 is going to be silver. This one's also for, someone asked about silver. Gary, here's what silver looks like. You're at resistance, better watch out. Okay, 1836, 1833, that's a level that we've been talking about for a while. That's what caught resistance last February and into the March open before the tumble. Look where the tumble found support, right at slope support rather. The reversal, okay, we're back above the median line, but there's that same Fibonacci confluence of which we couldn't really clear. We got to close like literally a couple pips above it. The close was 1840. It's at 1839, whatever. But we're there right now, okay? So that's the level you really need to respect as resistance. Now, the good thing is near-term support is not too far away. That 200-day moving average, ever since we broke above it and closed above it back on the 27th, has offered clear-cut support, and that's still converging basically on that median line. So give it till 1805 as support here on silver, but at the end of the day, you're definitely at risk for a little bit more of a pullback. Even momentum not really showing you a very strong upsurge here on silver prices. Again, this is a daily chart, so this means nothing until we get the close, but something to take into account. On the intraday, Gary, here's what it looks like. Okay, some ongoing divergence into those highs. This is the August low, 50% retracement. It's also the 100% extension, really? Oh, off that first leg. Right, so the whole zone is pretty big. And here is your weekly open. Yes, when I'm looking at divergence, I would have preferred like these two points to give us the reference in divergence. And in fact, that's what you have. One here and one here. So it could be more of an exhaustion play. Look, a 618 extension, taking into account the larger swing here, which is now more of a focus for me than this 100, would take you right into 1858. So maybe one last stab into that 50 line, which has offered a nice pivot in price. Maybe the place of which you get a little bit larger of a spill. But largely speaking, I'm looking for exhaustion like right here. Right here. Yeah, Gary, there is. I think that's a question that you're probably better off asking Jamie, to be completely honest with you. I don't really try to track those correlations too closely myself. I'm way too near term of a trader than to get too involved. But yeah, there are similarities in silver. And silver also tracks risk pretty strongly as well, something that's a huge input into production. So you do see silver costs also take a hit and or rally based on those large macro type of trends as well. But certainly everything is priced in dollars, right? So if the dollar gets a big spill, you'll tend, well, I say that loosely, to see them sort of get some strength or get some support underneath their foots. Or underneath their feet, I should say. That is silver. Gary, does that make sense? Does that help? This is cool. Many thanks to your analysis. Hey, more than welcome. Yeah, so watch this region here. It's a big zone that we were talking about. Again, if you see this circle, it's where we were looking for last week. We turned right at the monthly open. This is like a probe. So if this, let me put things in perspective. If we make a 4-hour reversal candle here off resistance, that's pretty bearish near term, okay? Especially with the divergence that you're getting in the pivot off 60. So watch for this 4-hour candle close. Yeah, no chances of an hourly reversal. And it would be a 2-hour outside candle reversal as well, and that would also be a bearish development near term. So some things to definitely check out, Gary, into the open of U.S. trade. We got Euro Yen, Dollar CAD. Who had the question on Dollar CAD? Here's what Dollar CAD looks like. I wanted to see a hold at 34.30. I know that Jamie's entry was at 34.30. 34.30 was the exact 618 retracement of the decline off the highs, but it also was a nice little confluence slope region. So I actually got in a little bit after this probe here, breakthrough, and the rally earlier today before the webinar. So I do want to see if we can hold sub 34.76 as sort of an initial area. It's a small position. I realize that we are breaking, but look at the daily chart, guys. And at the end of the day, I'm just not buying the fact that this is just a full-on recovery and resumption of the uptrend. Take a parallel off this. I know this is super messy. Just look at the bottom end of that parallel. That's what I'm willing to give it. Right? That's what I'm willing to give it back into that region. If it holds, be a nice region of which you could turn lower. You got some really nice holds along the lower parallel. The pivot break along the median line was the onset of a big rally. And, you know, even last week's low was right on the 50 line. So I'm not giving up on this slope just yet, but see if we can't reach some sort of dollar CAD. I think we might be early on the play here from a near-term prospect, guys. So I wouldn't necessarily advocate jumping in just yet, but certainly I'm looking for some exhaustion. I'm looking for some exhaustion here. Keep in mind, dollar CAD, double whammy Friday, still has non-farm payrolls and CAD employment data coming out at 8:30 Eastern simultaneously. Tends to be some wicked, wicked storms, especially on a divergent print. If one misses and one hits or vice versa, you can get some really crazy, radical plays on dollar CAD. So Friday, still the fireworks and major volatility for the loonie. All right, and that was number 12, 13. Anything else on the menu? Guys, things you want to talk about? Hi, Mike. Dollar CAD, trying to convince myself we are turning and looking for 5-minute triggers in divergence. Yeah, you know, when we get into major reversals like this, I tend not to just want to stress the near-term picture because you can get divergence on the 5-minute, Graham, as this thing continues to rip higher. And all of a sudden you're chasing your tail. This thing comes back 10 pips and then it rips another 30. So the 5-minute I tend to like when price is reaching a threshold of resistance either way, and I'm looking at it. Do you know what I'm saying? Which I don't think you're here yet. You know, I think, like I said, I might have jumped the gun a little bit early on the entry. I was looking at a 5-minute like you were, but we were at, you know, that 34.30 level, which is, you know, a Fibonacci consideration that I always take into account. Once we broke above it, and then you saw the slide below as momentum was breaking down, looked good to me, but here we are yet again at another high. So, you know, don't stress the 5-minute rather until broader price is coming into a region of, you know, resistance that we had on site. I just think I might have jumped the gun a little bit here, but We'll see. Another comment here says, and yes, dollar yet, and yes, the US dollar not open yet. Keep that in mind. That's correct. Vlad says dollar CAD could spike to 135.80, 136 on DXY strength. 36, a little too rich for my blood. I would say 35.75 is still a big region. That's going to be basically the close highs that we made for last year. Back in, I shouldn't say last year, for the latter part of last year, the December close high. And it's also the 50% retracement of the entire 2016 range. So ahead of 36, you know, that 35.75 region would be big. And this is, again, near term with slope. It would be a big zone I'd look at right ahead of that 36 level. Oh, I'm sorry, you have it on there, 35.80 into 36, yeah. Yep. The only thing is, Vlad, I kind of, like I told you, I'm an advocate of CAD strength at this point. So if dollar rips, I still don't know if it would drive dollar CAD that much higher. You know what I mean? Just based on my personal, again, opinion on where CAD is trading. So Graham, long story short, don't try to do that. Don't try to convince yourself of anything. Let the market convince you of what's going on. And I just don't think I'm going to get a chance to get in. I think dollar CAD will dump real quick, and then all of a sudden I'll be kicking myself. So we'll see. All right, guys, if there are no other questions, or if there are, feel free to post them on the message board. If not, we'll go ahead and wrap things up here. A quick note of housekeeping. I did get a lot of emails from you. I got bombarded, guys. I didn't get a chance to get back to all the emails. With regards to the SB signals, listen, the email will be going out over the next 72 hours. It's either going to be tonight or tomorrow. The developer is writing it, and everything is on our end is ready to go. We just wanted to get that webinar out as early as possible so you guys have that. It's archived. You know what to expect. And again, the welcome email for all the beta users and everyone who signed up is signed up. You don't need to double check or recertify. All your information's already been sent over to AlertFX, and it'll definitely be already in the system. New signups, I can't add you on just yet because we're just doing this, the release. So if you do want to sign up for the beta signals, give me a week and then go ahead and send an email. I'll let you know when, and we can add you on. But right now, the original beta users, they're going to get turned on within the next, like I said, 72 hours. So stay tuned. As soon as the email goes out, I will accompany it with its tweet on SB Squawk, so you guys are aware. But those haven't gone out yet. So if you haven't seen anything in your inbox, no worries. It should be there soon. Pete, Sterling, I'm not going to let you go, buddy. Here's what Sterling looks like real quick. I do want to look for a new low to get long. I don't know if it's here or not. Daily chart looks more provocative than the intraday chart looks like. The daily chart has the 100-day moving average and the 2016 low day close, which obviously was at the dump that we saw in October there. And the 100-day moving average, like I said, that gives you a nice little pivot right here. I do want to take a look at, but kind of ultimately I would have liked to drop into 123.60, 123.45 to get long. That's becoming less and less important because, again, that slope that I was looking at is kind of drifting away from us. So similar situation, looking for dollar to teeter out. That would be sterling strength. I don't know if you make another low or not from here first, but yeah, generally speaking, I would have to say I do favor the long side in the pound. So we'll see if we can't get some sort of basing. The obvious play would be a break above the weekly open to get this thing going. Key resistance hasn't changed in forever. I'd start to look a little bit more towards the highs from last month as a target, but this is still the major zone of resistance we'd need to clear. Basically 26.70, 27 in sterling to get the breakout. And that, my friends, would open up a whole realm of targets to the upside, in my humble opinion, on cable. We'll definitely revisit this as we get deeper into the week, Pete, but just a quick outlook. Feel free to take a snapshot of that if you need it. It's also available on the intraday chart page. I don't think it's been a couple of updates since the last time we looked at sterling. Okay, I got to run, guys. I will see you tomorrow morning, 8:30 Eastern, same time, same place. Best of luck trading. See you then. Cheers.